Hello everybody, this will be a local trend reversal strategy that I found using market Cipher B. Make sure to like the video and subscribe if you haven't already. There's really no videos out there on the YouTube like this. And I've learned this strategy kind of similar to Jason Casper. Big shout out to him. He likes to use the 12-minute time frame. I've kind of found my own little twist to it and using multiple time frames. So anyways, let's get into it. Right now, what I'm looking at right now is a switch between the 12-minute and 24-minute time frame. And what I'm really looking for is major lumpy anchor waves. And an anchor wave is really a momentum wave that is above the 60 line. You guys can turn on this solid OB OS line in Market Cipher B just by going to settings, go to styles, and then you can turn on OB1 solid and OS1 solid. And so this will give you that line that you can use to identify the anchor waves. And so anyways, based off of the 24-minute, we are looking at, again, lumpy waves. So here's the first lumpy wave. And so here's the second lumpy wave and the third lumpy wave. Now, it is important to do your TA when doing this and keeping this in mind, as you can get a more precision entry into it, and really you can risk a lot less and have a tighter stop loss. Therefore, you can increase your position size and increase your profits. So what I am looking at first on the 24-minute time frame is really the divergence trio, really, where we have three momentum waves, and then we have price making higher highs. And so this is a major bearish divergence. Another thing you can do to check, and this is important also, is that you want to see money flow coming down over time. And this right here, I did take a short from here. Again, this can work very well with the 24-minute time frame, just using two anchor waves. But however, I've learned that adding a third anchor wave into there can really increase your profits. So really, I took a short from right here. This was a good 3% move. But really, if you add that third momentum wave of a anchor wave in there, it like triples. So this was like a 7% move. I luckily didn't really take this short, but I saw this forming. I should have taken the short, but anyways, that is really much the gist of it. We'll get into more examples now. And so really looking for longs using this strategy. In this case, we are using the 12-minute time frame. Jason Casper loves the 12-minute time frame. Big shout out to him for kind of pointing this out too. And so again, we're looking for a major divergence of three large lumpy waves. And so you can see here that we have a large anchor wave right here, really big lumpy wave. We get a second lumpy wave, anchor wave, of course, right here. And then we got our third lumpy anchor wave right here. And so you can kind of see they're kind of like an island, large momentum waves. Again, they're anchor waves where they are going past the 60 line. And of course, you can see that price is coming down and it's making a very clear bullish divergence when this is happening. And again, the second factor you want to incorporate into this when looking at it is money flow too. So you can see that money flow was coming up. As you can see right there, when you zoom in, it was coming up over time. And of course, it was bouncing off of a level. A level just adds an extra layer and it can really get you into a very nice entry and have a pretty good stop loss so you don't get stopped out. And you can see when this happened, that price started to come up. Just measuring this out, you could have had another 6% move, even more actually. Really an 8% move. Now, something to not really look for is when you see a whole bunch of oversold waves. And yes, these are all anchor waves. Yes, there's a bunch of them, but they aren't really lumpy. You want to see like a single island mountain looking wave when identifying this strategy. Here's a good short example just using the 12-minute time frame. As you can see, we had price increasing, making higher highs over time. And then if we looked at market Cipher B, we can see again the 3 lumpy waves come in. And you can see here's our first lumpy wave. Really, there's no momentum waves really interfering with it. Here's our second anchor lumpy wave. As you can see, it kind of has its own lump to it. And then lastly, here's the third a lumpy wave, anchor wave 2. And you can see there's really no red dots really interfering or looking around with it. And you can see that over time, there's a very clear bearish divergence forming. So you can see, and another second thing to look at, of course, is that you want to see money flow either kind of going sideways really, or just kind of steadily going in the direction you want. You don't want to see a large increase in money flow in between these anchor waves, because this can throw off the strategy. And so let's go over the strategy. Really, we can call this the market Cipher local trend reversal. And again, the key time frames to this strategy is the 12-minute and 24-minute. Really, the 24-minute is more powerful, as you can see, but the 12-minute works pretty well too. And so the first thing you want to look for is 3 large momentum waves, and you want to see these lumpy looking. So they're like the single wave, and there's really no other kind of waves around it. Next thing you want to look for is, of course, 3 anchor waves. Actually, I'll just say like these must be 3 large anchor waves, and they must be lumpy. And really, you want to see momentum greater than 65 on each of these. Really, when you turn on the OB solid and OB or S solid, it will be 60. But really, you want to see it kind of go past that and just be a large momentum wave. The larger, the better. And you want to see a clear divergence. I want you to be more picky about looking at the divergences when looking at this. You really want to see a clear higher high as momentum is kind of coming down with this. And of course, it must be between 3 momentum waves. And then the second thing, this is very important too, is that you want to see money flow moving in the direction you want price. So if you're longing, you want to see money flow coming up. If you're shorting, you want to see money flow coming down. And again, you can see money flow going sideways. You just don't want to see money flow increasing very strongly and kind of negating the strategy. That is very important. So that is pretty much it. Make sure to like the video and subscribe if you haven't already. Plus, I'll leave a link to Market Cipher in the description, along with a Discord where I post all my trades, along with other traders journaling their trades as well. Thanks. Bye.